Citizens of the world, welcome back to another Keep Yours podcast where we try and keep a few more dollars in your pocket. Today we continue with our COVID series, and today's message is the reckoning to come, which I wish was a little bit brighter story, but since the politicians don't seem to have a plan and there's a lot of uncertainty, there's also a whole lot of optimism that's going on right now. And as much as I would like to be optimistic, it's a little hard when you consider the data that's being put in front of you. So let's just get right into it. What's going on today is I'm basically trying to prepare people for the reckoning to come. So people are expecting the economy starting to open up a little bit, and therefore everyone's going right back to work and everything's going to go back to being the same. Well, those of us who are realistic understand that this is not really an option. It's just impractical with what's already happened. And at some point you have to assess the damage done and say, okay, that damage is done. Now we can stop continuing to do damage, or we're going to continue to do more damage, and the recovery is going to take longer and be worse. But even if they said the whole economy is open tomorrow, which they won't and they can't, then there would still be massive problems of when people are returning to work, which jobs come back. And there's already firms that have gone out of business. There will continue to be damage in specific markets, and there's only so much they can do. So I look at it like this. We've been given a prison sentence from the judge, and they haven't told us how long it's going to be yet and when we're going to start. So we know we're in trouble, but we don't necessarily know how much trouble, and we don't know when we have to start paying for the problems that we've caused. And if we just look at this from debt report. So the New York Fed every quarter issues the U.S. household debt report. Well, with the exception of credit card debt, which actually went down a little bit last quarter, once again, debts continue to rise. And I'm expecting debts to rise even further because so many people are now putting off payments. And when we put off payments, eventually that bill comes due. And there's a huge problem with these payment deferrals, and depending on the market that they're in and how much government control there is over those, there's going to be a reckoning to come, and the question again is when. So let's say that you couldn't afford to pay rent for a month. Well, are you going to be able to make up that payment in a few months? Not if you don't go back to work, not if there's not jobs. Or what about your car payments? We can defer them. Now, if you own a home and it's under the federal government, we could potentially tack that loan on to the end. But we also have to realize that these loan payments are also what pays people's retirement. So if you don't make your home payment, maybe somebody else isn't getting their retirement payment, which means they don't have money. So it's layered. This is, I keep talking about this as being like an onion, and the layers are just going to keep peeling back and peeling back. And just like an onion, as you get deeper and deeper into the layers, they get stinkier and stinkier and stinkier. You don't really want to deal with them, but at some point you have to. And we all know that when you really start dealing with an onion, you end up crying a lot. And that's probably what's going to happen here too. So the other issue we have is the CARES Act has thrown a lot of free money, especially at unemployed people, where now all of a sudden you're making more in unemployment than you were working, which has created conflict between business owners and employees. We always expect the business owner to do the right thing to keep employees on, but now all of a sudden when it's reversed and the employee's making more money on unemployment than they would going back to work, I literally have employees who want to be laid off because they would get more money. That's not a good situation for anybody. It makes it tough for business owners. It makes it tough for the employees. Obviously, as a business owner, you want your employees to do well. You want them to, you don't want to be taking money away from them. But unfortunately, the government's put a lot of business owners in this position, and it's made a lot of employees just tell their employees, no, I don't care if you got the PPP money and you're trying to not just use the payroll part, but also pay rent and other things. I do better on unemployment, so I'm going to stay there. That's just bad all around. But regardless, this extra unemployment money runs out at the end of July. So how many more issues are we going to have then? And how many more people are going to be laid off by companies at the end of June when their PPP money runs out? Now they can't afford to keep them on payroll anymore. We don't know. So As much as the federal government likes to believe it's solving problems with all of this, and I don't really have a problem necessarily with paying people more for unemployment when it's not necessarily their fault, but the way they went about it with a typical government, huge, broad stroke, not necessarily getting money to the people who need it. And in effect, you could look at this as a democratic handout to the banks. So if we say, hey, we're going to give people who made $15 an hour, we're now going to give them equivalent of $25 an hour. Well, now you're transferring them more money they had before. Maybe they can actually pay off some of that credit card debt. And so instead of the banks having to write off that debt, maybe they get the money from the federal government, which you and I get to pay back over the long term in this thing called taxes, which is how it all works. And we've forgotten the fact that we actually have to pay these bills later. So we act like government printing money and throwing it out of airplanes is a good thing instead of, wait a minute, that's our money. Other thing we got going on right now is the markets don't seem to care. So unemployment numbers go way up. Stock market doesn't care. Credit Fed issues report on household debt going up. Stock market doesn't seem to care. Tech stocks will do better because they're expecting these companies to get even bigger. But over the next 2 years, they're probably going to foresee the foreseeable future, there's a lot of pain for them too. Just because Netflix has a lot of people at home subscribing right now, pretty soon they're going to run out of new content. There's competitors to them, and people will not be able to either afford the service. People will get on multiple accounts, and as people can get out more, they're going to start watching less. Those subscriptions will be cut. I expect you'll see a drop in the Netflix stock over the next year to two. Short term, everything looks great for Netflix. 35 plus million people are unemployed right now. And jobs are going to return when? And there's a big question mark around when. And for some of those jobs, it may be never. But let's look at someplace like Las Vegas. When are people going to feel comfortable traveling again? I don't have an answer for this. I just know it's not soon. And I think what you're going to see is a lot of Las Vegas properties. There will be a very, very slow reopening, which means a lot of those jobs aren't coming back quickly. The fact that the economy's reopened does not mean a lot of these jobs are going to come back anytime soon. Before we can get back to full occupancy and full employment, we have to have people not so concerned about getting sick. We have to have a methodology of how we're going to deal with this crisis. And we also have to have consumer confidence return, which that means in part certain jobs have to come back. Now, as long as we maintain this social distancing, if I own a restaurant, I'm pretty concerned about when I'm going to open it. I'm pretty concerned about them closing me down again. And how many more closures are we going to go through? And when are parents going to have daycare so their children can go back to school? And there's just so many more questions. The layer of this onion just peels off one after the other. Here's what I do know. Law firms are hiring bankruptcy attorneys. They're not hiring bankruptcy attorneys because they expect no business in bankruptcy. They're expecting bankruptcy business to boom for the next number of years. And this has already begun, and we're going to get into this in the layers. It's one of the aspects that means that those jobs aren't necessarily coming back quickly, especially in those firms. The oil patch is already a huge problem. And in and of itself, the oil patch could have potentially caused a recession in the U.S. That's a guaranteed one that's going to continue for a long time. There is so much excess supply because of lack of demand over the last few months. And there's so many oil countries that depend on this for revenue that I think it's going to be a very long time before we see a stable oil and gas market. Now, when it does come back, odds are that prices will rise even higher because we're not going to see the same supply return as demand returns. So oil and stocks may be a good long-term buy, but over the short term, there's going to be a lot of pain. There's already beginning to be bankruptcies in the oil patch. Those will continue. All right, so here's the first problem that we've got is what is our plan for this? And this has been driving me nuts recently because originally they talked about flattening the curve. Okay, but if you look at what flatten the curve means that we all still have to get sick. It's the part of flatten the curve that they didn't talk about a lot up front, and now they've just kind of dismissed, and we've gone into this no one's allowed to get sick, no one's allowed to die. And there's a big problem with that, and namely the fact that we can't afford to do it, but B, the destruction of the economy seems to be worse than what the disease is. Now, had they been right and it actually killed 2 to 3% of the people who got it, that would be a catastrophe. And there may be a time in our life that there is something that's like Ebola was this deadly. And if Ebola was the one that was out right now, we would all be sheltered in home, frightened because the body bags in the streets would be piling up. But that's not really the case. If we look at all-cause mortality, i.e. everybody that is dying, and we look at the increased number of deaths that we're seeing with COVID-19 also included, it doesn't, on my mind, necessitate the response that we've had. And I think that Americans are waking up to this, that we're seeing this, that it's not as deadly as they told us, and that if you have a decent immune system, you may not get it at all. And just like all diseases, if you struck out on the DNA lottery, if you've got underlying conditions, then there's going to be multiples of things that will kill you. And I think if we parsed out the data and we said, look, how many healthy people are dying, then we would reassess the risk. And we would realize that the risk of dying is pretty low. And as long as hospitals are not completely overrun, then maybe we need to have a plan to get to herd immunity where we actually get past this. It's either that or we're waiting for a vaccine. So if we're saying we're going with herd immunity, which is flatten the curve, which is a slower transmission, well, what's the plan for how many can get sick? How much testing do we need? How much people do we want to get sick? Should we be pushing people to get sick? Before there was necessarily a chickenpox vaccine, it used to be that when one of the kids at school got chickenpox, we didn't tell them and all the other kids to stay home. We sent them all to the school to get sick so that they would all get chickenpox at the same time, and then we would be over it quickly. Now, we can't do exactly the same thing with COVID-19 where we end up with way too many people getting sick. And we've obviously found out that this thing can go wild and rampant pretty quick because so many people who have no symptoms can be giving it to everybody else. Hence you wear a mask in public, not to protect yourself from getting sick, but to protect potentially you getting a lot of other people sick because you may have no symptoms, but you can pass it along. But if we're going to flatten the curve, what's the plan for the flattening? Who's getting sick and when, so that we can try and get back to some sort of normalcy. And maybe it's, hey, we send grade school kids back to school right now. And maybe we send colleges back to school in the fall, knowing that these groups will get sick. So if we sent grade school kids back now, we would say, okay, grade school kids plus their parents plus the teachers and their families are going to be exposed right now. So we could then ask everybody else to try and very much limit exposure. But this idea right now that we have of we want no more transmission and we're going to try and eradicate the disease seems to be pretty far-fetched based on the data. This seems to be out there. It seems to be with us. So we're going to be living with it for a while. The question is are we going to have a plan to try and get to herd immunity or not? Or we're waiting for a vaccine, which means we all stay at home and all of us do nothing? The economic impacts of this are so layered. There's so many ripple effects that people don't realize. There are going to be more people starving in emerging economies over the next 2 years because of this than will die from if we did nothing and allowed everyone to get sick. We could say the same thing in the US about we have 35 million people unemployed. How long will those people be unemployed? What we saw after the 08-09 financial crisis was that people who are on unemployment for a long time, start losing their job skills because we're not training them in for jobs that are going to be available soon or for the ones that are because our job training programs don't align with the jobs needed or people don't want to do those jobs. But what we saw was this huge increase in drug abuse and drug use. And what resulted from that was the opioid epidemic, which also pushed by some big pharma, especially Purdue Pharmaceuticals. But regardless, a lot of people started on legal drugs given to them by their doctor. But what they end up on is street drugs. Then those street drugs end up laced with fentanyl, and all of a sudden we have a ton of people dying from overdoses. Well, are we going to end up with more people dying from overdoses over the next couple of years and more people, more families destroyed over drug abuse because there's no jobs? Because we didn't want a couple of people to die from COVID? So all of a sudden, the medicine seems to be a lot worse than the disease right now. And I think a lot of people are coming back to question the response. And I think that's very valid. And there's also a question of all of our civil liberties and government pretending that they can solve all these problems because they can't. But currently, there's no treatment and there's no plan. And I'll tell you what, businesses do terrible with so much uncertainty. And put yourself in the small business owner. So if you own a restaurant, are you going to go buy inventory for the next couple of months when if there's another outbreak, they're going to shut you down again? Are you going to be able to figure out how to pay your rent and have the right amount of people for the amount of business that's going to return? Because it's not like we flick the switch on a restaurant and all of a sudden, all of the people come back. You have the same thing with, Disneyland's got this problem. And where I live in Eagle County, we may have this problem come the summer and the fall of how many people are going to be comfortable going to a resort, whether it's to ski or to ride rides or whether it's for the beach, whatever the case may be. How comfortable is everyone going to be traveling around with the idea that, hey, it could close tomorrow? I mean, currently still, if you go to Hawaii, you get off the plane, you have to self-quarantine for 2 weeks. That's not going to make a lot of people want to buy a plane ticket to Hawaii. And right now, plane tickets are cheap. But what's going to happen in a couple years when things start to turn back around and we've taken all this capacity out? Prices are going to go way, way up. So that's going to hurt the American consumer. Plus, how many people don't have jobs? So there's a lot of unknowns, more unknowns than known still with this. But all that's doing from the financial pain perspective, in a lot of respects, is pushing it down the road. And that's why I called this one the reckoning to come, because I think we've gotten a little complacent with this idea that we can just defer credit card payments, we can defer home loan payments, we can defer our car payments, and that's all okay, and that doesn't come back to hurt us. But it does, because there's a lot of landlords not receiving rent, and a lot of them will never get that rent back. Restaurants cannot get the money back from patrons that aren't patronizing this month. That's revenue that's gone for forever. I haven't had a haircut in 3 months. I was due right about the time that we decided to go into self-quarantine because we thought that this was going to be a lot worse than it was. But it's not like when I go back to my barber, I might give him 3 months of tips, but I don't need 3 haircuts. So that revenue is gone for forever. It's the same thing with Disneyland. We have this idea of this pent-up demand, which is true to a certain extent. We all want to get out and start doing things. But from a large economical perspective, it just doesn't make sense. So let's dive into a few of the details. Start with unemployment. 35 million people and counting. 20 million in April. Last month, the last 2 weeks, 3.169 million. I think that actually got revised up, and 2.9 million. So basically 3 million people per week. Each one of those weeks in and of itself would have been a record for the last 30 years, had it not been that the prior weeks were even worse. And what frightens me is that we continue to see these numbers. Now, part of it you could say is, well, it's people have been trying to get unemployment finally actually getting through and getting their claims made. But I think it's actually the layers of this, of how much revenue is being lost by companies. And you see the big company, especially big unprofitable companies, Uber, Airbnb, starting to lay off a lot of people to try and get to profitability because they know that it's going to be really hard to get additional money going forward. So unemployment numbers are huge. The market doesn't seem to care. The CARES Act created some conflict, so some people don't want to go back to work. I can't blame them. Ironically, for the socialists, this is proving that incentives matter. So it's proving that if you pay people more to stay home than go to work, they're not going to work just because the work needs to get done. Incentives have always mattered. And what we could end up with is an economy more like Italy, where there's tons of corruption and the government's in charge of everything and nobody does their job on the outset and you have to pay them more to get anything done. It's called bribes, and that happens all the time in Italy. So we could end up there long term if we have the government in charge of more things. But this is showing that incentives matter. If you just give people money, this idea of universal basic income, and I'm all for having stopgaps. I believe that the United States has enough wealth in this country that nobody who needs it and treats it with respect, everyone should have access to housing, everyone should have access to food, everyone should have access to healthcare. So if you're saying we're giving them money to do those things and we're going to make sure that everyone has that stopgap, I'm okay with that. But that's not what they did here. What they did here is they gave people who had a job, who may have an employer who's trying to get them back to work right now, they gave them more money than they were receiving before. That doesn't make any sense to me ever. Why would you give somebody more money to do nothing and create nothing? Because at the end of the day, if you didn't hear Elon Musk on Joe Rogan's podcast last week, I recommend a listen because he said something very important. We're printing money for people to do nothing, which means that nothing's getting made. So pretty soon there's nothing to buy. And while we keep printing money and that seems okay right now, at some point, it's not okay. And we will have massive inflation because there's no goods being made. We have to make goods. We have to create value. And when the government gives people an incentive not to create value, we end up with a lot of problems. August 1st, when the extra unemployment money runs out, that's reckoning. We'll call it the beginning of the reckoning. Unless the government, which the House already passed a ridiculous bill this week to just throw more money at everybody, print another $3 trillion. Let's remember, that's our money as taxpayers. We have to pay that back. Now, this also, to me, seems like a bribe. This seems like a 2020 campaign option of, hey, if you vote for us, the Democrats, we're going to keep giving you lots of free money. There's no such thing as a free lunch. There's no such thing as the government printing money and it not having to be repaid eventually. This modern monetary theory of we can just keep printing money without consequence is not true. There's always a consequence to debt. Always. Somebody has to get paid. Sometimes can you work your way out of it? Yes, but there's still pain to have. Any person who has debt, everybody wants the get out of jail free card. Every student with student loan debt. What's the fastest, easiest way I can go to pay back my student loan debt? Every person with credit card debt. What's the fastest, easiest way I can pay off my credit card debt? There is never a, pay it back easy money. That button doesn't exist. Pay it back easy button doesn't exist for debt. Debt always has to be paid back by future earnings. So if we look at the amount that the government has borrowed, over 20, I think we're at close to 25 trillion now. And you look at government revenue, which is around 4 trillion a year. Okay, so we have 8 years of government revenue already spoken for. And that doesn't even include all the Social Security and Medicare benefits that we have to pay regardless. So if we look at, you take Social Security and Medicare and you take those into account, all of a sudden we're at like 20 years of all of the money to government. We fire everybody, collect all the money still, and you're potentially 20 years. Versus for most people, once they get to 2 to 3 years of all of their payments going, they go, well, I'm just going to declare bankruptcy. So instead, we're not going to declare bankruptcy in the U.S. What are we going to do? It's going to create inflation so that the government can collect more money because the dollars are worth less, and then we can pay back the dollars of debt with less money. And this is actually what's going to mess with everybody going forward is in my lifetime, I didn't experience the high inflation. I was born in the 70s. So the high inflationary 70s are going to come back because the U.S. is going to print all of this money. The thing is no one's prepared for that. No one's prepared for how this is going to work. and wages are not going to rise as fast as inflation's going to go up, and it's going to create huge problems in the US. This is my concern. So just unemployment alone, when are people going to feel safe to return to restaurants and to traveling? When are people going to feel safe? Until you make people feel safe, your economy is not bouncing back. So what are we all hoping on a vaccine? Well, what if the vaccine turns out that what happens when one person dies from the vaccine? Then are we worried about the vaccine's efficacy? Is the disease worse than the vaccine? Nobody knows. How long will a vaccine actually take for them to be able to do the trials to make sure it works and to then create enough for everyone to get one, right? How long is that going to be? We can't keep people not working until then because the damage to the world, again, we'll have more people starving than will die from this disease. It's not as bad as everybody said it was. That doesn't mean I want to get it. It sounds like it is terrible for some people. But guess what? We have diseases every day that are terrible for people. We haven't cured all of those. If we treated heart disease like we do COVID-19, then every time anyone bought a sugary drink, then we would have a huge amount of tax on it. Or we wouldn't even allow them to buy it. What about tobacco? 500,000 people die every year from tobacco. Every year. We're not saying you can't smoke cigarettes. Of course you can. Freedom of choice. Right? So this is a risk. And while I don't want to get it, I'm not that frightened of it. If you have a healthy immune system, I think that's the best thing that you can do. Because what's the next one? The flu could kill you too. Pneumonia can kill you as well. It's just those things are out there. So until people feel comfortable to return to travel and restaurants, we don't get anything back to normal. There's nowhere even close. The second layer of layoffs is going to come. Like I said, as soon as this PPP money runs out, end of June. Right? Now, some people got it in, most of it's out. Some people could still get it now. Interestingly enough, if you're a restaurant or another business that's not allowed to open now, and it sounds like they're going to try and modify the rules so your 60-day period starts when you're open. But potentially for some people, it would have been good to not apply for it up front because it comes 60 days after. But okay, for 60 days, a lot of people have money to pay their employees. What happens then? At the end of that 60 days, if business hasn't returned, you're going to see more layoffs. We already talked about, hey, what happens at the end of July when the unemployment extra $600 a week runs out? More people won't be able to pay their bills. So the reckoning is to come. So here's our CARES Act free money plan, right? Oh, hey, free money for everybody. And again, no free lunch, but self-employed people, starting March 29th, extra $600 a week. Extension of total benefits, which will help. Right? And my definition for most people when we're talking about what do I need in savings, what should my savings be? My answer is your savings plus your regular unemployment money needs to carry you for 12 months so that you don't lose your house and your car. And then within that 12 months, hopefully you can find a job or make adjustments. That's what I personally recommend to most people, because the only way that you don't get that money for unemployment is if you get yourself fired, in which case, you're building up a savings account for yourself to quit. That's called early retirement. That's a different plan. But everyone's getting this extra money. So for right now, everything seems okay. People have money. Well, for how long? The same for the people getting extra unemployment. The PPP money is giving businesses extra money to keep people on payrolls. Again, for now. So what happens when all of this extra money runs out? End of July. I don't know, but I know it's not going to be pretty. Now, I assume that the government's just going to throw more money at it. But the more the government tries to fix this, the more the government gets involved, the longer they're going to extend until the pain comes, but then the longer the pain's going to be afterwards. The longer the recovery is. And basically, here's the easiest way I can explain this to you. The sooner that all of the debts that can't be paid go through bankruptcy, the sooner that all of the assets underlying all of those get processed through, and put back into the world, the sooner we can get back to growth in the economy. The longer that process takes, the worse in terms of duration and time that this goes. Because we're only extended, this is an extend and pretend. 35 million people are not getting their jobs back on August the 1st. It's just not going to happen. A lot of these people who are furloughed are going to end up permanently furloughed. Here's an easy example. Cars that are being made. Well, short term, there's going to be an increase in purchasing of cars for people who don't want to commute on public transportation. But that only works to a certain degree because only a certain number of people have jobs. And once those people buy their cars, then there's going to be a huge number of people not buying cars this year. For example, the rental car companies not buying cars this year. Okay, they're just not going to do it. A lot of families who have people unemployed will extend until they buy a car, till they absolutely have to. If I don't have a job, I don't need a car. So car buying is going to slow down considerably, right? So factories that make cars aren't going to open back to the same capacity that they were at before. So a lot of these jobs people think are coming back are not coming back, right? Until people feel comfortable with restaurants, those jobs are not coming back. Until people feel comfortable traveling, airline jobs are not coming back. And even though the airlines have kept most of the people right now, they will be laying more and more people off. Same thing with the hotels. All of these furloughed people might not be coming back. And as businesses realize revenue streams that are previously were there aren't there because of the uncertainty of the business environment and because people aren't spending on retail goods or whatever, or services or anything else, those jobs don't come back as well. So the federal government's promised our future tax dollars to extend everybody for a little bit, but if they had a real plan right now, then this could work. But we have no plan, and benefits are going to end, which is going to create this extended problem. The other issue is our debts keep growing, and I'm just going to talk about consumer debt right now. The highest it's ever been, $14 trillion. Okay? Delinquency rates right now are the same as they were a year ago. That's at the end of Q1. Okay. But again, that's because they've printed all of this money to prevent delinquency rates from rising. So despite the fact that you would think a crisis like this, people would stop taking on debt, it's not true. It's not what's happened. But here's the kicker. Now, all of a sudden, you saw the big banks. Big banks have not been in part of the rally, really, from the stock market perspective. And the big banks came out and they said, look, we're going to have tons of losses just from the oil patch alone. So what do? They're going to tighten credit standards. So if you got laid off, your credit cards are going to reduce the amount that you can use, right? They were already tightening credit standards before this because debt was already huge, right? Highest it's ever been. Does that look familiar? Q3 2008. Crash time. Now we have more debt than that. What does that tell you? That even without COVID, problems, right? So they'd already started to shrink and then tighten credit standards. Now they're going to tighten them even more. So while there's 0% financing for cars, fewer people can access it. While rates on homes have gone down, fewer people can access it. So credit standards going to be tightening, which in a credit market means there's going to be a lot less spending. And what people don't realize is, with the exception of government spending, which has also been fueling this growth in the market, a lot of the growth has been fueled by debt. Well, that's not real growth. That's what I like to call fake growth. And sooner or later that catches up with you. With COVID tacked on, we're past that. We're definitely involved in that. Here's the other thing right now. The reason delinquency rates aren't up is because everyone's allowing forbearance. Everyone's pushing. It's called extend and pretend. And everyone wants to pretend that all the bills will eventually get paid, even though they're extending them. So home mortgages, extended. Car payments, extended. Credit card payments, extended. Everyone's getting an extension. And all the companies issuing those extensions are doing so saying that, hey, this person had a job before. They're probably going to get a job back. So if we extend them and don't force them into bankruptcy, then they'll probably be able to repay us. And so those companies aren't showing those losses yet because right now they're predicting that those customers will get their jobs back and they'll be able to repay all their debts. Not going to be able to happen. Too much debt, too much uncertainty. These things aren't coming back. So this is the preparation part. So for those of us who are employed still, who are lucky enough to still have a job, we're going to have opportunities because all of these debts are going to come due. It's just extended, right? So all of it, all of these companies extending all of these payments, right? But again, there's big questions on these for a lot of these extensions. The question is when you extend these out, are it's going to be a lump sum that you go at the end, or are you going to get it tacked onto the end of the loan? Now, we assume that, hey, it's easy, just tack it all onto the end of the loan. But the problem is all loans aren't treated the same. And not everyone can just tack it on. And if I personally loaned you all the money to buy your house, and now I have to put your loan into forbearance, and I say, yeah, 3 months tacked on to the end. Well, guess what that means for me right now for these 3 months? I have no income. So you're not paying your mortgage payment to me. Right? Now, are you making your tax payment? Now, what if I'm a landlord and you're not being able to pay? The landlord still has other expenses. He still has to pay property taxes, right? We still have to pay for maintenance. So not all of the expenses just go away. We still have to pay insurance. These expenses don't just eliminate because you forbear your payment. So I have expenses. I don't have the revenue, which means I have less money in my pocket, which means I'm spending less. That also shrinks down what the economy can do. There's a lot of big mortgage providers that bundle these mortgages, use the payments to pay out shareholders of these, and a lot of those are retirees. So now they don't have as much money in their pockets. That's another problem. So there's no one panacea where hey, just do this and it all works. It doesn't work that way. If you don't make your payment right now, but you still owe, how are you going to make up those payments in the future? It's the same debt problem that you get into if you end up in the debt loop, where all of a sudden you have so much debt that your payments just go to all that. Well, what happens to all these debts that are due when those unemployment benefits run out? Are they still getting paid at the same rate, or are those delinquency rates that over here were about the same in Q1, they're probably going to be the same in Q2 because the government gave everybody money? What happens in Q3 and Q4? And this is why, this is the reckoning to come, because the government's just pushing it out. But the other thing that they're also doing in pushing all of this out is they're using our future tax money to do it, which in some cases might be a good idea, but in many cases is a bad idea. Rents are a big problem all over the place. Now, when most people talk about rent, they just think about their mortgage. But what about commercial rents? And commercial rents will be the first one that flips over, and we're going to talk about that here shortly. But what about, and Airbnb is probably the first one. A third of Airbnb renters, not the renters who are doing the renting, but the people who are doing, the landlords who are renting the properties, a third of those people have 25 or more properties. Now, if you're in a beach location, you might be okay for the summer, assuming that families are willing to get out and travel based on risk and worried about shutdowns. But what about if you're in other locations where your revenue was based on other things? Like, let's say you're in a college town. And normally right now, it's May. You would be booked solid for 2 weeks for graduations and kids moving out and all the celebrations that go along with that. No rent this time. When do rents come back? It depends. So you've got a lot of people owning and using Airbnb that already have a problem, right? And they're going to be the ones who start selling. right? You're going to see people with vacation homes who have gotten laid off, who now all of a sudden can't afford those two payments, start putting their vacation homes on the market. And depending on the market of where those are at, how quickly are people returning to vacation there? We don't know. That really depends. Again, all of the unknowns, right? So real estate right now, all the real estate professionals are going, oh, well, real estate's fine. There's a lot of people who want to move out of cities, so we've got a lot of activity right now. There's not a lot of properties being put on the market because nobody wants to move right now, so we have low inventory. So prices are maintained right now. Okay. Well, you also have this other piece where people can't get kicked out of their homes, even if they don't pay their mortgage. How long does that continue? And that's why the reckoning is to come, because the government's pushed it all out. All right, let's talk about bankruptcies that's going on. Bankruptcy firms are hiring, and I've been making this joke to people that the only people hiring are bankruptcy and divorce firms right now because that's the writing on the wall. But here's the reality of it. It's true. And they're expecting corporate bankruptcy numbers to be the highest ever from a crisis. That's not a joke. That's real, right? So what's that going to mean for us? Well, first it starts with oil firms. Oil firms, Whiting Petroleum, Diamond Offshore Drilling, they're the first names to come through. There's going to be a lot of other oil firms that go bankrupt. Even as the supply begins to shrink, especially if it gets shut down again. Oh my goodness, we get shut down again, then the oil market patch will just go from horrible to unbearable. Which, again, short term for prices for consumers, that's great. Gasoline's less than $1 a gallon some places. But long term, what this is going to do to the supply demand and the amount of investment made, long term prices are going to go way up. Short term, they're going to be way down. A lot of firms are going to be going bankrupt in the meantime. Retail, Neiman Marcus, J. Crew, J.C. Penney, the list is going to get very, very long. COVID might be the same to retailers as it is for old people. It is not COVID-19 is not what's killing a 90-year-old. It's just kind of giving them that final push. Old age is what's killing them. The change in the retail environment is what's killing most of the retailers, right? Shopping online, obviously it's way easier. You can price shop a lot better. Now, it's not as nice to go check out if the brand is going to fit you, but the writing's on the wall for retail firms and malls. This one's going to give them that extra push and get rid of a lot of them. I expect this list to continue to go up. Gold's Gym filed for bankruptcy, which is wild. So even the gyms can't maintain. Hertz is in bankruptcy. So, and all the rental car companies right now are crushed because the majority of their business is from transportation from airports. And since no one's flying, no one's moving around, no one's renting cars. And in fact, I believe Hertz said this year they're not even going to buy any cars, which again goes back to factories being open. And now you start seeing the layers of the onion that get unpeeled of all these ripple effects of what happens when airlines stop flying. Oh, not just the airline employees. Oh, all the secondary market, rental cars, hotels, restaurants, all of the places that business travelers and people going off on vacations were frequenting. Now all of a sudden, there's no business. That's a massive problem. What's the next one here? Sporting goods stores are going on. More retail pain. And leagues, XFL, USA Rugby, bankrupt. We don't have the money. How are we going to do this? Major League Baseball is fighting with its players right now. A lot of the players don't want to play for half of the money because they're not going to collect it all. All that advertising dollars, who knows what happens. And when we start talking about layers of the onion, these are the layers we start pulling back. What happens? California state universities said they're not having on-campus classes this fall. Okay. What about football programs, sports programs? I assume those are probably getting pushed out a year. Okay, how much money does that generate for the local economy? We just talked about local hotels and restaurants. How much business do they do because of the university? How much housing is there for the students that's now no longer going to be occupied and not rented? And while that's probably good for student balance sheets and less student loan debt, That's really bad for the local economy that depends on all of those renters and those students spending money at all of the stores and all of the restaurants. So how many of those are now gone because they can't go a year with no income? I don't know the answer how many. I know it's a lot. So this is the large company stuff. When we start drilling down to small businesses, it gets really frightening. New York Times estimates 40% of small businesses fail within the next 6 months because politicians don't have a plan for us. We don't know what we're doing. If they said, hey, we're going herd immunity, and right now, elementary school kids are going back, and we're going to put them in school even this summer, that will also allow those parents to go back to work if they still have a job, right? Which a lot of them are going to have a problem with right now. But if daycare and schools aren't open, how do people go back to work? Right? I don't know. But if we had a plan where we said, hey, we're going to go expose these people first, then we're going to add on middle school, then we'll add in high school, then we'll add the college kids, and we had a plan for the opening with an expectation of how many people would actually get sick. Meanwhile, we're protecting the people who are really most at risk. Then all of a sudden we would have an idea of which businesses could open and when and what kind of volume of activity they would expect. Instead, we have no plan and therefore mass uncertainty with business owners. And if I owned a restaurant right now, I would be very hesitant to reopen it, worried about it closing again. If I had a restaurant in a college town, I would be frightened. If those college kids don't come back, how am I going to have the revenue that I had before just to pay myself and the rent? And a lot of people of no fault of their own, and could just be horrible timing. Some will have a bad business model. It's not really necessarily their fault, and it's sort of the tragedy of government already shutting things down. You can't flip the switch back open, reopen, and everything goes back to the same. Even if you have a restaurant and you could reopen it tomorrow, will people come back? I don't know. How highly likely am I to go visit restaurants right now? Gotta say, without a plan from the government, I'm pretty concerned to go sit in a restaurant. So some restaurants that do takeout might still do okay. Or restaurants are going to transition to be takeout restaurants and try and renegotiate leases with landlords. There's going to be a lot of people who just walk away. And landlords may want to sue them, but a lot of those people are probably going to be bankrupt anyway. And we're going to talk about that a little bit. If the bankruptcy firms are hiring from all of these businesses going bankrupt, what about all of the people, the businesses that they do business with? So when oil firms go bankrupt, we like to pretend like the oil firm itself, oh, it goes bankrupt, no big deal. The same amount of work has to be done, but that's not true. There will be consolidation. There will be a lot of people who get laid off from the oil firm jobs, which are well paying, versus the retail jobs not so well paying. Those ones probably made up mostly in warehouse jobs and other things, not so big to worry about, right? Versus things like car rentals, which that's just money gone. If the car's not rented today, if a hotel room isn't rented today, that's money you can never get back. It's not like I have pent up demand. So I was going to go on a vacation for a week because that's what I could afford. And now all of a sudden I can afford 3 weeks. And all of a sudden the hotel can triple the occupancy from everybody wanting to do the same thing and get money back for the last 3 months. It's gone. And once some of that money is gone, it's gone for forever. There's no way to make it up. There's no way if I sell people meals, I can feed them for the last 2 months when they didn't come to my restaurant. And in fact, most of us living at home probably eating too much and putting on weight too. I know I am. All right, so after bankruptcy, then what? Jobs returning. Some. When? Okay, so the V-shaped recovery means everyone goes back to work, everything returns to normal very quickly. I don't believe this is any possible. We talked about schools. When are they going to open? When daycare is going to open? Lots of people can't go back to full-time work because their kids aren't there. This is a nightmare for parents that all of a sudden, not only do you have a job that you may have to do, but all of a sudden you also have a job being a parent and a teacher. So now you've got the parent job you signed up for, the job you signed up for, but now you have the teaching job that you probably didn't sign up for, but now you're required to do. And what's the long-term impact to students from this? Something. So, as I said, Cal State University's no on-campus classes this fall. how many more universities are going to do that? And what's the echo effect of that in terms of the schools themselves? A lot more are going to fail. Enrollment's going to be down. Students aren't going to want to pay as much for not having in-classroom classes. And they're right, because learning is not the same. The studies have shown that you do not learn as much when you're not in a group of people who are physically present. And that's just human nature. We're all going to care more. We all care about what other people around us think, and we also get stimulated by all of the other people in the classroom. Again, oil and gas has crashed, and this one's going to last for a while, and those are really good paying jobs. So those aren't coming back quickly. Guaranteed those aren't. Las Vegas jobs. Literally the credit unions in Las Vegas are trying to figure out which jobs are never coming back, which jobs will come back sooner than later. And there's a lot of problems, and Vegas is going to be one of those places that is going to be, I don't want to use the word decimated, but I think that's probably the right word, because so much of their business is based on tourism. And even if they opened up tomorrow and said, we're open for business, everyone can come. Again, who's feeling confident and safe to come? Of course, there will be some people who do it. Just like anything, there's certain people that are into risk, prone to risk, and ready, and they are jonesing. But that's not international flights of people coming. That's not the herd of people coming over from Southern California. And that's also not all of the people who would have gone on a Vegas vacation who are now unemployed and are not going to do so. The other part of this is that jobs are going to change. So I ask this question: will I ever need a waiter again? I can now order food on my phone to be delivered to my house at a specific time. If I can do that on my phone and have food delivered from whatever restaurant I choose to my home, why can't I do that at a table in the restaurant? Maybe I don't need a waiter, and maybe that's one of the way restaurants save money. And in fact, maybe what they end up with is a robot that's the runner. So the chef in the back gets your order, so you have no physical contact with him, and he doesn't bring your food out or anyone else. They put it on a tray that's an automated robot, and it drives over to your table, and you take your food off of the table and probably get rid of your dishes the exact same way. Or everyone moves to paper plates. I don't know. My fear is that the waitressing job goes away for forever, that this doesn't come back. And my real fear behind that is that this is the entryway to lower middle class and middle class. It's the fastest, easiest path, and there are so many people that rely on it that this just may go away. And will restaurants have to shrink in size where people have to eat only in certain places? So either I need fewer waiters or I don't need any. Hotel check-in, I say the same thing. Why does it that I get an Airbnb, they send me a code on my phone to a home, I go press the code into the keypad, I walk into the home, we're done. There doesn't need to be somebody there to give me a hotel key, and check me into a room. That can all be done automatically online. One person in the back can do the job of 3 or 4 people, and now all of a sudden there's one less interaction. So COVID's going to require businesses change on interaction level, and that has long-term consequences in terms of some jobs are no longer necessary. Now, will the Airbnb idea even extend and exist in the future? Another good question. Probably so, because people will want to stay at residential places instead of hotels. But how many more people will be in that business and how that affects the investment stream of rental properties, who knows? Right now, if you own an investment property in Hawaii, you're probably getting no income because people are quarantined for 2 weeks. So while people might want to book with you because we want to go to Hawaii, I'm also very concerned that they put that 2-week travel requirement in again and or just don't even allow me to come. Then if I got to cancel my trip, do I get my money back? Well, that's going to be an issue this year. Companies are going to do social distancing automation, whether that's office space alone or whether that's, as I was discussing in restaurants, getting more functions done without people or just automation in general. That's all coming. And that means some of these jobs, which for people who rely on their physical labor to make money, it just gets harder and harder and harder. And this is no different than it's ever been in any economy in any of the world that I know of. It's the 50% at the bottom take almost all of the pain all of the time. And the 20% at the bottom will be the hardest hit. And that's the unfortunate part of this, is the educated who can work from home, the 30 to 35% of people who have that luxury, who still have their jobs, they're not nearly as impacted by this. But the bottom 20 to 30% of the economy, of people who make the least amount in wages, often have to show up to their jobs, and a lot of those jobs are going to go away. And that's going to be unfortunate. We're going to have another discussion in America about what to do with these people and how to keep them working, or what jobs they could do potentially in society to make the whole world work better. What about office space? Now, all of a sudden, so few people go in the office, and you're going to want fewer people in the office because otherwise your staff's all at risk. There's going to be a lot of managers that have now been forced to learn to manage from afar that will learn to do so. There's a lot of asses in seats people, as I like to call them, where they think because someone's sitting in a desk at an office that they're actually working. That's not true. There's water cooler talk every day, and what I find is people are, once they get used to it, if you learn how to hold them accountable, they're more productive not working from there. And you get a lot of your time back as an employee. You don't have this commute time. You don't have to get ready every morning and buy clothes to go in the office every day. Now that people are used to that, they're going to want that more. So jobs are going to change, and they're not all coming back. It's just a reality that we're going to deal with, and that damage has been done. And the longer this goes, the more of that will be true. The fewer of those jobs that will return. And that means more and more people will run out of their unemployment money, and the reckoning to come means, they're going to get hurt worse. Stock market remains irrational. I'm going to go through the stock market's always irrational. You got to realize that stock market's about gambling, right? But here's the one thing that I want to say. The Federal Reserve's printing money. They're buying bonds. The market's right now best on a V-shaped recovery. Corporate earnings, aren't showing it. There's tons of stuff to come, but there's more questions than answers. Here's what I want to say about the market in general for most people. For the most part, everyone has been sold on this idea of dollar cost averaging, continue to invest. Over the long term, the market goes up. While I believe in a lot of those principles fundamentally, there is a problem with that right now, which is there's so much unknown. The market is one huge gambling factory right now. And for my money, it's not a place to be right now. Now, that doesn't mean over the long term, the market may not rise, but we could end up with a Japanese lost decade economy, where the Nikkei Stock Exchange is still not back to what it was 20 years ago. So there's no guarantee that the market keeps rising. And right now, there's almost a guarantee that it goes down. I would recommend to a lot of people, you move a lot of your money into money market funds, just move it into cash. If you can, if it's in IRAs and you can buy into inflation hedges, do that, because the Fed's going to continue to print money. Now, the stock market is inevitably going to go down because of a lot of these bankruptcies. So individual stocks may do okay. But a lot of people are into exchange traded funds now. And while in these times, I don't believe that that's a good strategy. I think the much better strategy is to understand the market's going to drop considerably and be very conservative with your bets right now. And I know that treasuries don't, pay much right now at all. I'm not necessarily recommending those either. But the approach to all of this, you might want to reconsider. All of the sudden, all of the things that they told us before about debt being bad, about dollar cost averaging and how we invest, many of those things are not going to be true. All of a sudden, the exchange traded fund versus paying somebody to manage that fund may not be true either, because there's going to be winners and losers. And you might need some help with people picking those. If you just pick an index right now, it's very likely you end up with a whole lot of losers inside of that index, and you're going to take the losses on that. So you might need to get a little more selective with your investment strategy. So what happens when the music stops? All right. So first of all, anything that's got to do with a party, the champagne cork went right back in that champagne bottle. We're not having parties, right? So that means everything's affected. But what happens when the Fed's money runs out? The PPP money, the unemployment money, all of the sudden, the normal factors that play into the recalibration and exchange of debt, where we need all of this, a lot of debt to get written off and recycled. That means banks are going to take losses, investment firms are going to take losses, investors are going to take losses, and then those assets will be sold back into the world and used again. The longer that the Fed pushes that out, the longer that recovery will be. Despite the fact that they believe that that's not the case, it always is. Every time the government tries to fix anything, they screw it up worse than it was before. That's just the nature of government. And then they control it for longer and have a bunch of rules in place, and they just make it a mess. Right now, no one can get evicted. What happens when all the debt payments come due later this year and there's 35 million people unemployed? That's the question that I want people to ask. And that's why I'm saying that the stock market is not building in this factor. Right now, it's illegal to evict people. That's not going to be the case. And as soon as you can evict people, people who haven't paid their rent are going to get evicted. Right now, you can't foreclose. But as soon as you can foreclose on people, people who haven't made their payments are going to get foreclosed upon. Now, are people going to try and, are companies and landlords and everyone going to try and work with people to a certain extent? Yes, to a certain extent. But to a certain extent, no, because they still have to pay their bills. So here's what I expect. First, commercial properties are going to get harder. So many businesses can't pay rent. So many are going to go out of business. So many office spaces aren't going to be needed. WeWork's in big trouble. They're bankrupt in my mind already. They were already losing tens of millions, if not billions of dollars a year. They're probably going bankrupt very quickly. They're already trying to renegotiate a bunch of their leases and hope that this office sharing space idea weathers a downturn. I don't think it does. Social distancing doesn't make shared office space seem like a good idea. And companies not paying the rent and having fewer employees means there's 35 million less people need an office or need somewhere to go to work right now. That's not good for office space. So commercial will see it first. The other reason commercial markets see it first is there's no elimination of evictions right now. So if you don't pay your rent right now, a landlord can still kick you out. And a lot of business owners just went and took their stuff out of the building and already told the landlord, sorry, I can't pay. You're going to see more and more of that as restaurants and retail fails over the next 6 to 9 months. That the commercial market's going to get hammered. The personal bankruptcies, apartment rents dropping because everyone's moving in together, and evictions, those begin later this year when the free Fed money runs out. And again, they will probably print more, but all they'll do is extend and pretend this a little bit longer, which makes it worse in the long term. Car possessions and big discounts on used cars come later this year as these things start happening. But already the rental car companies aren't buying. The deals on new cars have already gone through the roof. The deals on used cars are in some respects there. They'll be there even more so as soon as we allow people to start getting their cars repossessed. And once all of the we're going to extend and pretend goes away because they realize that extend and pretend doesn't work. Home prices will stop dropping next year when personal bankruptcies and evictions add to the inventory. More and more people got to get out of their second homes. All the short-term Airbnb rentals are already in trouble unless summer travel picks up a ton and people feel confident going out. That's going to continue. So those are getting put on the market first. More property will come on the market later. So these are the inevitables. All of these things have to get pushed through. For those people who still have a job and are lucky enough to be working, then there are deals for you out there, right? Mortgage rates have never been lower. I'm in the process of refining right now to 2.5% on a 15-year, which seems like free money almost. Cars are on big discount. So if it's time for you, if the timing is right, there are, obviously great deals on new cars, which I would never recommend, but the deals on used cars are just going to get bigger and bigger. And I expect home prices on the short term to stay about where they are, but starting this fall and really next year, the evictions, the people moving in together, those will start picking up. Apartment prices will drop because the lack of people in them, especially if universities don't come back. There's going to be a ton of excess capacity in the university market. As people move in together to try and weather the storm, there will be more places available. The big apartment complex prices will drop, which will drop prices around the rest of the market, which will mean more people with rental properties can't afford to pay their mortgages, which means they'll be selling them. And between evictions, between foreclosures, all of that will push a lot more property into the market and prices will drop. Now, over the next couple of decades to come, I expect we'll have massive inflation and a lot higher taxes, which that's the part of the stock market I don't understand. If we're printing all this money long term, that means tax rates have to go up, which means valuations for future profits of companies go down just from tax revenue. And therefore, we should see a drop in stock prices just because of that. This is what I'm explaining is really just classic economics and financial policy. You can't print more money and increase the money supply without the value of each dollar reducing. That's literally what inflation is. It's because they printed more money. So now they're printing a lot more money, which means they're going to long-term have a lot more inflation. Short-term will have deflation, so they'll ignore it, but long-term that will become a problem. And therefore, our habits need to change. The things that we've been told before, where all debt is bad, is not necessarily going to be true for an investor. Because if you're talking about your primary residence and you still have your job and you can pay rent, having more debt isn't necessarily going to be bad when inflation happens, because hopefully you're able to charge more for your services and you'll collect more money, but the value of your property will rise not because the value of your property's increased, but because the value of the dollar is decreased. So what used to cost $100,000 will now cost $120,000. And therefore, the loan that you pay back, you'll get to raise rents, right? Or your salary will increase, and therefore you will pay debt back with cheaper dollars. That's an important strategy to be aware of, that all of a sudden, this paradigm that we've always thought of all debt is bad, that's pushed out there by a lot of people, all of a sudden not necessarily so true. And there's just going to be a lot of reverberations, a lot of problems from what they've done and how they're treating this. And again, still, there is no plan. That's the biggest thing. That's why the reckoning to come is so massive, because there is no plan. And hopefully soon we will get a plan. But until then, plan that they don't have a plan, that things are going to get really, really ugly, that a lot of these jobs aren't going to come back, and that you need to have a brand new strategy for how you are going to weather the storm, whether or not your expenses need to go way down, whether or not you need to sell things, whether or not you need to get roommates. You need to address all of these things in your personal life. And unfortunately, it's not easy, and it's not an easy time right now. But one of the things I am grateful for that I've seen with the data that comes out is this virus isn't killing as many people as we thought it was going to. And therefore, we shouldn't be as scared of it. Now we just need to get the politicians to act accordingly. So I hope this helps everybody with sort of what's to come and why, what the data is out there, what the economics say. I don't provide financial advice in terms of investments. I just try and teach you all how to be your own fisherman so that you can decide what's best to do with your money. And also understand that regardless of what they're telling you, there is real pain in the economy. This is going to go on for a long time. Plan for the duration, not for the short term. Don't buy the myth that all things are going to go back to normal very quickly. Buy the reality that things are going to change, and you might need to update your job skill set to adapt for that. And I wish you all the best. So I hope this helps. If it does, please give us a nice review, subscribe, pass it on to your friends, and everyone take care of themselves. And I'll catch you next time.